Let us close the market. Please, may I have the closing prayers?
Please, shall we pray? Father, in Jesus' name, Almighty God.
Closing gong there live from the floor of the Nigerian Stock Exchange. That's bringing to a close trading activities for today, Tuesday. And we'll link up with TVC News crew at the Stock Exchange for further details of today's proceedings. But first, let me welcome you to Business Nigeria. I am Tolu Lokpe Ogunjobi. Glad to have you join us again. Now, one of Nigeria's development finance institutions, that's the Bank of Industry, says it is working to ensure loans with lower interest rates are accessed by its beneficiaries. It was speaking at the gathering of development finance institutions on the continent. Lara Folayan reports.
Cheap access to credits remains a setback for many businesses in Nigeria. Nigeria's Bank of Industry has just concluded talks with other development finance institutions across the continent at this conference in Abuja, the Nigerian capital. It says new lessons have been learnt from the experience of its contemporaries. It is now working on cheaper access to credits for small and medium enterprises in the country.
It's a challenge in all the countries. How do you get financing to those that require it at a cost that makes sense? We all know in Nigeria today, the average cost of borrowing money, or the lending rates in most of the banks, between 20 and 30%, depending on what you want to do. How many businesses can you do at those kind of interest rates and still make money? In most cases, they're not sustainable. But then a bank like Bank of Industry, everybody wants to, have access to interest rate of 9, 10%. But then we ourselves, what we have is not totally unlimited. So we are constantly ourselves, trying to be creative to look for ways we can raise more money to help the industrial sector.
The Industrial Bank acknowledges the importance of development finance to economic development. It says it is now intensifying efforts at expanding interventions in Nigeria.
The African continent as a whole is in their need of financing for development. And Nigeria has been crying for infrastructure development, for agricultural development. So the forum couldn't have come at a better time than now, when the continent and Nigeria in particular is in their need of financing for development. Bank of Industry is going to lead in the process of taking up the challenges and addressing the challenges.
The African Development Finance Institutions Association, on its part, wants members to support their home countries in development projects funded.
This is a huge call for all players, for all stakeholders. It becomes important that we look at achieving delivery of effective development in the continent as a collective. There is no one country, there is no one institution that can achieve this enormous challenge that we are faced with, of ending poverty, of putting in place infrastructure, of feeding our people, of creating jobs, of industrialization.
Nigeria's Industrial Bank's latest commitment to providing cheaper access to credits follows its recent loan disbursement to MSMEs in several states across the country. Lara Folayan, TVC News, Abuja.
Now, dollar injection into the economy estimated at $9 billion since February this year. It has helped the Central Bank of Nigeria achieve long-term naira stability and also curbs volatility in the foreign exchange market. The CBN has in the last 9 months sustained its weekly dollar interventions to the Forex market. A large part of it goes into the interbank market, Bureau de change, retail secondary markets, intervention sales and wholesale sports. According to the CBN's Deputy Governor, Financial System Stability, Joseph Nana, the dollar injections is to enable stakeholders secure enough forex for their operations and in the process boost naira stability. Well, the Chief Executive Officer of Kari Assets, Johnson Chukwu, now joins me via Skype to delve more into this. Thanks so much for joining us again, Mr. Johnson Chukwu.
My pleasure.
We're looking at the funds, the intervention of the central bank now for more than 9 months now. More than $9 billion US dollars has been used to actually defend the Naira. First, let me start in plain terms. What is your view with regards to this move by the Apex Bank?
Well, I think the CBN's new policy of investors and exporters window has actually created a lot of liquidity in the FX market. We've seen, like you rightly pointed out, the volume has increased progressively, and investors' confidence among foreign portfolio investors has also gone up. So we are seeing a situation where the Nigerian FX market liquidity has, to a large extent, been restored.
Has been restored, but that disparity we still experience it. That's talking about the interbank and the BDCs. It's still not very close.
Yes, you still have that gap, but if you look at the kind of gap we used to have in the past, I mean, until last year we had a gap of between between 305 and 525. We've gradually moved down to a margin of about 40 naira to a dollar. In fact, yeah, about 40 to 50 naira to a dollar. That is when you compare the 360, which is the investor exporters window, and the official rate of 305. But having said that, we've seen that gradually, we've seen even the investors window trading below 360, which means that what the government may now need to consider is moving the official window upwards towards converging with the investors window, because the investors window seems to mirror the actual value of currency that traders are ready to place on the Naira.
Now, if you're talking about the I&E window, which, yes, I also heard the CBN governor saying, well, lots of funds are coming in. I think we're doing close to 18 billion now US dollars at the moment. Why are manufacturers and industrialists still crying? Some are still saying they can't access foreign exchange to bring in raw materials and all of that. And the figures we're also getting from these sectors are not really impressive.
Well, you have to recognize the fact that we still do not have a liberalized FX market. We still have, to a large extent, regulated FX market because our Naira is not yet floating. What that means is that for you to do any transaction that involves FX, assessing FX, you must back it up with relevant documents. So for an importer that wants to bring in raw materials or finished goods, there are certain documentary requirements they need to meet. And if they don't meet those documentary requirements, they cannot access FX from the official window. Also recall that there are about 41 items that are banned from accessing FX from the official window. So the fact that you want people, there are still people, that those things are not banned from being imported means there's a demand for FX that cannot be met through the official windows. And that demand will naturally remain in the unofficial window.
Indeed. Now, CEO, the price of crude oil has been a little bit of stability. We're doing even above 60, even above our benchmark for our budget. We're doing far better than that. And many say these proceeds are coming from crude oil sales. CBN is sustaining the Naira with these funds. Do you see them going ahead? Is this going to be a continuous process?
So do I see them going ahead with what?
Is it going to be a continuous process? Are we going to keep pumping these funds to defend or to stabilize our Naira?
Well, as it is, the structure of our economy is such that central bank is the market maker when it comes to FX. Central bank is the recipient of about 90 billion of FX inflow. So, because central bank is the sole recipient of earnings from crude oil sales, and our crude oil sales account for about 90 billion of foreign exchange earnings. So central bank will continue to intervene in the market unless the economy matures to a point where we have a diversified export product environment where several exporters can bring in enough inflows, and the central bank inflow coming from central bank no longer account for 90 million inflows. Otherwise, the structure of our economy is such that the central bank will naturally remain for quite some time until the economy diversifies as a major supplier of FX in the market. So they will continue to intervene in the market. If they don't intervene, they will be scarcity in the market because they are the recipients unless they change the model and now want to reintroduce the wholesale FX market and sell to the banks, who now sell to their customers. But that can only be achieved when they can only consider that when we achieve a high level of reserve. At such point, they want to create a more market-oriented FX environment.
Now, talking about the reserves, which you've mentioned now, the Apex Bank has come to say we are doing, I think we have like 35 billion US dollars now as with regards to our foreign reserves. And also the MPC meeting where the decision was taken that should remain on status quo, all figures remain as it is. They also referred to some of these issues, the stability in the Forex market. And so are you saying, is it a fragile growth which we have could also be responsible for some of these moves by the Apex Bank?
Well, I wouldn't call it fragile. What I would say is that we still have a relatively skewed economic environment to the extent that single products account for 90% of our foreign exchange earnings and directly and indirectly account for 70% of foreign federal government revenue. Today, oil price, according to the Central Bank, National Bureau of Statistics and Central Bank, that oil price average about, NNPC, that oil price average about $52 per barrel in the first 10 months of this year, which is higher than the $44.5 per barrel benchmark for 2017 budget. What that means is that government is earning enough revenue from oil sales, but we still do not have a very robust reserve at 30 billion. And remember that by the time government assesses the 5.5 billion they want to assess, we'll have a debt of about $20 billion. So we need to continue to push for diversification of our foreign exchange earnings. We need to push that our foreign exchange earnings should go beyond oil sales. Otherwise, our economy will remain to a large extent beholden by what happens in the FX market, which also informed the reason why, Moody downgraded Nigeria's credit rating. Because Moody said that our drive to diversify our foreign exchange earning has not been successful, and therefore we are still susceptible to changes in the fortune of oil sector and in terms of our economic health.
All right, Mr. Chukwu, before I let you go, very importantly, you just talked about the debt. And many have said, even the minister has come out to say, we are still below threshold. We are doing very well when it comes to debt. But some analysts are worried that we are kind of piling up more and more of debt. An expert view of that, please.
Well, I think we are moving toward a dangerous territory. The simple reason is this. Our independent sources, debt service account for close to 60% of our independent revenue, which means we do not have headroom for additional borrowing, in as much as our debt to GDP ratio is still low. But in terms of revenue, our debt to revenue, or debt service to revenue is quite high. So Nigeria does not have the luxury of measuring its debt sustainability by using debt to GDP ratio, because we do not have a robust and diversified earnings profile. So government must be very cautious when it comes to accumulating additional debt. We are not in a dangerous territory, but we are moving towards an uncomfortable territory. Like I mentioned, by the time we assess the 5.5 billion that the government wants to assess, we will have a foreign debt of about 20 billion. Remember that the year when we exited Paris Club debt, our total debt was only about 30 billion. So we are moving close to that. We've gone back to about 66% of what we had when we had a debt crisis. Not to talk of the local currency debt. So government must be conscious of the fact that what matters to us should be the debt service to revenue and not necessarily total debt to GDP ratio.
Johnson Chukwu, Chief Executive Officer, Cowrie Assets, I must thank you very much. It's always nice talking to you on Business Nigeria.
My pleasure.
Well, we'll take a break, and when we return, correspondent Yusuf Akogu will be giving us updates of today's proceedings at the Nigerian stock market. Stay with us. This is Business Nigeria. Glad to have you back now. Well, we'll move straight to the stock market, where TVC News reporter, correspondent Yusuf Akogu is actually joining us now from the exchange. Hello, Yusuf. Give us an update of today's proceedings.
Thank you, Tolu. The transaction on the floor of the Nigerian Stock Exchange ended this Tuesday in the positive territory. The all-share index closed up by 0.68%. I have with me a stockbroker with App Security who traded on the floor to take us through how today proceeding went on the floor of the Nigerian Stock Exchange. Jami Mohammed, welcome to TVC.
Thank you very much, Yusuf.
Tell us, the market closed positive. What drive the trade pattern today?
Actually, the market closed on the positive side. If you look at those top gainers, you realize that they are the high cap stock in the market, and our market is value-weighted index. Anytime those stocks gains, you see the market close in the green region. So now, that's exactly what happened today. You have seen the likes of Nigerian breweries, you see the likes of Stanbic, and also CBN, they have gained today. And that's what gave response to the market close in the green territory.
Now, is the market reacting to any economic decision? Like yesterday, we saw President Muhammadu Buhari inaugurated the tripartite minimum wage committee. Is the market reacting to it in any way positive?
Not actually, because the civil servants are not majorly the people that are buying stock or that are investing in the market. We have foreign investors and we have corporate investors. So these two people are the forces that drives this market, not the minimum. I mean the salary earners. So okay. It's not really what we expect that is the one moving the market. No.
Okay, like you said, let's look at the top trade for today. We have it's dominated by the banking stock. Actually, you have the Diamond Bank, the Zenith Bank, and the First Bank. Why are the banks dominating the market at this time?
Actually, what gave rise to that is that this is the way our market is being perceived. Because if you see most of our trade in the market, it's always around 70-80% being banking stock. And I give a reason for that. The reason I alluded to that is that when our market started to gain prominence in the eyes of individual or people on the street, what they realized is that it coincided with the time that CBN said the banking sector should recapitalize. I think around 2006, 2005 or so. So at that period in time, a lot of banks came into the market with a lot of right issue, initial public offer, and so on and so forth. So people rush into banking sector. So that now gave banking sector an edge over other stocks. So that's the reason why a lot of people patronize that stock more than any other stock in the market.
Nigeria Brewery is on the gainers chart today. It's one of the large cap stock in the stock exchange.
Yes, I think it's a result of a value investor. This stock has been going down since it has traded 170, 180 before. Then we also realized that there's a serious seller coming into the market, and due to the forces of demand and supply, the stock was forced down to as low as 130. So for that, getting to the lowest price of the day, so the value investor always look for a cheap stock. They must have calculated their own fair price and fair value of the stock, and they realize that this stock is trading below the fair value, so they quickly took the advantage and enter. And so if you see such a thing, you see people going for that stock, and the stock will start to rise again. So that is what exactly that happened.
Quickly, on the loser chart, you have the MOBI.
Yes, the MOBI issue, the reason why MOBI is coming down is that MOBI is a bit highly priced to some investor. So for you to have seen a stock that has been highly priced, you should expect that sellers should flock that stock with a serious volume, and that's the reason why it's responsible for you to be coming down.
Thank you very much, Jerry. That's the most we can take on the show today.
You're welcome. Thank you.
Thank you very much, and it's back to you in the studio for the rest of the program.
All right, there, Yusuf Akogu. Thank you very much for bringing us up to speed with trading. Good news there. Market closing positive at a 0.68%. That's the all-share index. A good one there. Thank you, Yusuf there. Well, away from that now. All right, there is time for everything. A time to work and a time to get rewards. Well, TVC News has been honored with the 2017 Media Award for Quality Capital Market Reporting. The yearly prestigious Pearl Awards rewards outstanding performance of quoted companies in the Nigerian capital market.
The time is now to reward excellence.
The Pearl Award is an initiative to reward corporate excellence that spurs quoted companies to explore innovative and competitive approaches towards achieving growth. It is organized to recognize and celebrate outstanding corporate giants who dare to win in spite of the daunting challenges in the operating environment.
The Pearl Awards prides itself on the fact that it's not just like any other award. It's a unique award in the sense that it's based on actual performance of companies quoted on the Nigerian Stock Exchange. We have clearly defined indices, and over the years, we have been able to maintain our credibility, integrity, and objectivity of the awards.
The theme for this year's award is Winning with Tenacity. TVC News was honored with an award as the 2017 Media Award for Quality Capital Market Reporting. The Group Chief Executive Officer of the United Capital, Oluwatoyin Sani, was honored as the most outstanding CEO of the year.
With great honor and joy that I accept the Pearl Award on behalf of the board and executive management of United Capital PLC. United Capital is transforming the African continent by providing innovative investment banking, capital and finance solutions to African governments, companies and individuals.
The organizers say they hope the award will spur TVC News management to deliver more on its objective reporting of events and developments in the capital market. Barakel Ukuta, TVC News, Lagos.
Great, well, congratulations, TVC. But like they say, the reward for hard work is more work. Well, that's a wrap on the show, Business Nigeria. Thank you very much for watching. On behalf of the entire production crew, I thank you again. My name is Tolulope Ogunjobi. Join us again tomorrow, God willing, for a fresh edition. Bye for now.